Meanwhile, US stocks advanced on Wednesday as cooler than expected inflation data helped staunch a sharp sell-off, while the escalation of US President Donald Trump's chaotic multi-front tariff war kept gains in check. The S&P 500 and the Nasdaq closed in positive territory, the latter enjoying a muscular boost from tech and tech-adjacent momentum stocks.
The blue chip Dow waffled between red and green for much of the session but ended modestly lower on the day. The S&P 500 gained 27.23 points or 0.49% to end at 5,599.30 points, while the Nasdaq Composite gained 212.36 points or 1.22% to 17,648.45. The Dow Jones Industrial Average fell 82.55 points or 0.2% to 41,350.93.
I mean, the boost in the market today is largely because of less severe inflationary report. And so therefore some hope that the Fed put is kind of coming back alive. And we've seen some evidence of that lately. I mean, the market's been in a correction. It's been due for a bounce. It's almost looking for any excuse to try to find its footing. Whether this is the start of a recovery, however, is a little bit premature to know. But again, I think the primary reason for today's bounce is maybe less negative news in general and a little bit of positive news on the inflation front.
The Labour Department's Consumer Price Index showed consumer prices cooling more than analysts expected, providing reassurance that inflation is headed in the right direction and keeping hopes alive that the US Federal Reserve could cut its key interest rate this year. On Monday, the S&P 500 dipped below its 200-day moving average, considered a significant support level, for the first time since November 2023. On March 6, the tech-heavy Nasdaq dipped more than 10% below its record closing high reached on December 16, confirming it has been in a correction since then.